Good morning and welcome to Stock Market Today. It's Tuesday, June 4th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. You can sign up for a free email, follow along with this show, get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities were mixed in Monday's trading, and they finished off the worst levels of the day. Comm services, tech, and consumer discretionary were hit the hardest, hurt by concerns about antitrust scrutiny facing or potentially facing Google, Amazon, Apple, and Facebook. Materials, energy, and staples were the best performers on the day. Treasuries extended their recent rally, pushing the 10-year yield to its lowest level since September 2017. Dollar was weaker on the major crosses. Gold finished up 1.3%, following through on Friday's strength. WTI crude settled down 0.5% after falling nearly 9% last week. So your outperformers, materials, energy, staples, and utilities. Underperformers, all lower on the day. Comm services, tech, and consumer discretionary. Now, as we get to the desk this morning, futures are up about 0.5%, near the best levels of the morning as of this recording. Asian markets, though, were mostly weaker overnight. China fell nearly 1%. European markets this morning are higher. Treasuries are under pressure with the curve flattening. The dollar is little changed on the major crosses. Gold is adding on, up 20 basis points, and WTI crude is following through to the downside, down about 1% here to start the day. Your S&P 500, let's take a look at the chart here. Support near 2720, then below that 2650. Again, as we said yesterday, these are not arbitrary levels. I don't want to crowd the chart any more than I already have, but 2720 is a 38% retracement of this move from December to May, low to high. And 2650 is a 50% retracement of that same move. Now, we have resistance starts to come into play at 2800 and 2850. As I said yesterday, those were gap lower opens for the S&P 500. RSI nearing oversold levels, actually kind of right there, right? 2991 on the RSI. So technically, I guess we have hit oversold conditions. Chaikin money flow is now bearish for a second day in a row. So what are we looking for here? We are looking for a stabilization above these key support levels. As we start to see a stabilization above these key support levels, we will start to look to the names that outperformed. The names that held up best really through the month of May as the market sold off, those are your likely leaders as the market stabilizes and begins to move higher. Now, what do we need to gain confidence that we will see a stabilization at 2720 here in the near term? Well, we want to see the RSI start to move higher and eventually break back above 60. If the RSI fails to get above the 50-60 level as the market tries to hold 2720, I think then you have to start to think about a potential break, right? So we're always updating our views, our probabilities, our odds of support holding or breaking based on what we're seeing in the marketplace. One thing that we are concerned about and do want to see stabilize, and I think we will, is tech. Tech was hit hard, right, on those antitrust concerns yesterday. So tech at 20% of the index, we want to see that stabilize. So there you have what we're looking for on the markets. Market in a minute. What I'm talking about in my note today to Chaikin Analytics clients, small caps outperformed during a mixed session. Antitrust concerns weigh on large cap technology stocks. We're going to hit on that in a little while. That pushed the group deeper into an oversold position. I get into this in my note today. Our overbought, oversold indicator is now deeply oversold for the XLK technology. Sector rotation continues to favor defensive positioning for now. So that's something else. We want to see the offensive groups, the cyclical groups, start to outperform as support holds. Futures do point to a higher open here today. Taking a look at the power bars now for the major indices. All still skewed in favor of the bears. Now, again, as we said, it was a mixed session yesterday. Dow added 11 basis points, but 2 bulls to 6 bears. S&P 500 down 21 basis points, 73 bullish or very bullish stocks for 96 bearish or very bearish stocks. There's that NASDAQ underperformance. There's that tech pressure. And then just general de-risking across the board in technology. NASDAQ down over 2%, 8 bullish or very bullish stocks, 26 bearish or very bearish stocks. Small caps, as we said, outperformed on the day, but the power bar ratio is still skewed in favor of the bears. 311 bulls, 428 bears. Bonds, another rally, as we said, push that 10-year below 2.1% on the day, although I would note yields are backing up a bit here this morning, and materials had a nice day, up 3% plus. Power bar ratio still skewed in favor of the bears, 2 bulls to 4 bears, and we have to wonder if that's a lot of the gold strength and strength in the gold stocks really pushing that group higher on the day and really over the past 2 days. So according to the Chaikin power bar, small cap stocks and large cap stocks are somewhat bearish. Major indexes mixed to bearish. Our stock of the day today is Arconic from the metals group. Closed at 22.12, up 1% yesterday. Has a very bullish rating due to very positive expert activity, attractive financial metrics, and strong earnings performance. Stock does have weak price volume activity in the near term. However, 20 factors, very bullish rating, strong trend, still a weak industry group. But this is an interesting name here as it stabilizes above support at the $21 level. Remember, we talk about relative strength, the importance we place on it. Market and model are in agreement. Dynamic duos in here. Bullish ratings since the end of February, outperforming since early May. Intensity of outperformance picking up. So as the market sold off through the month of May, what did Arconic do? It went sideways. That's relative strength. Should the market stabilize, we would look to a name like this to be a potential leader. I think the stock looks interesting here in the near term as it is in oversold conditions. Money flow is bullish above a rising long-term trend line. I think if you're looking for some long ideas, you want to think about this name. If you want to wait for the market to stabilize, realize that this name should start to move higher ahead of that stabilization. But either way, Arconic is a name to consider on the bullish side of the portfolio here today. Looking at our sector tracker now, movement of the major sectors over the last 5 days. Materials, there's that big move higher. Moves it to the top of the list over the last 5 trading days. Only sector to be up over those last 5 days as well. After that, it's the defensive groups, real estate and utilities outperforming the market, and really a function of number 1, defensive positioning, number 2, the decline in yields. Industrial staples, healthcare and fins, middle of the road. Financials are starting to look better on a relative basis. Not quite there yet, but I will note that of all the sectors, they do have the strongest power bar ratio. Discretionary, energy, tech, and comms at the bottom of the list. Energy continues to be a group that we want to avoid. The other groups looks like near-term pressure. Discretionary kind of bothers me a little bit. Tech and communications, let's see if we can get a snapback rebound if that was an overreaction to the antitrust concerns. Only time will tell, so we'll continue to monitor those trends. Right now, the near term looks a little dicey, but tech could be at an interesting juncture. Our industry in focus today, cap market services, 7 bulls to 5 bears. And over the past 6 months, it's been roughly an inline to slightly outperforming by 63 basis points, but it does have a strong power bar ratio. It is currently ranked number 4 of 21 subsectors, and it's moved down 2 slots over the past week. Some of the indicative names there with very bullish ratings: Ameriprise Financial, AMP, Legg Mason, LM, and LPL Financial Holdings. Ticker symbol there is LPLA. And let's take a look at LPL because this is an interesting name here. As I said, fundamentals in the financials remain strong. Power bar ratio is the strongest of all of the major sectors, and we're starting to see an improvement in the bearish relative trend. So I think it makes sense to start looking for some of these leading names here, especially the ones that have been outperforming the market. So we have a very bullish stock, strong trend, strong industry group, investment bankers and managers. Market and model are in agreement. Remember, this ribbon at the bottom of the screen tells us where the power gauge rating is and has been for the past 12 months, and we've been on that bullish rating since April. Early May, stock begins to outperform, and the intensity of the outperformance has been increasing. Chaikin money flow is bullish. Stock is above a rising long-term trend line. Now, we had a breakout on this gap higher, and we're pulling back to test the breakout level. I think as long as this stock holds above the $79 to $80 level, you want to consider it on the long side of your portfolio. And now we see that our overbought, oversold indicator is nearing oversold, or actually entering oversold conditions. So again, we talk about the relative strength. I know I sound like a broken record, but it is that important. Stocks that are outperforming as the market goes down are your likely leaders when the market stabilizes. Look at what this stock did throughout May. It basically went sideways as the market declined. That is relative strength. That is outperformance. These are the type of names we look to. This is essentially the setup we look for. Very bullish stock, outperforming the market, bullish money flow, becomes oversold. It then looks compelling on the long side. Let's look at yesterday's S&P gainers and losers. Nectar and KTR Some data on one of their phase 2 studies was received positively. Stock up 8%. Analyst day today for Capri. Stock was higher, 4.74%. LyondellBasell ending deal talks. That's news hitting the tape today. Sent stock higher yesterday. Aptiv, APTV seeing a bit of a rebound after coming under pressure late last week. No real news on Borg Warner, BWA. That stock higher, 4.3%. Centene lower by 10% as Humana says it's not likely to push for a combination of the companies. Facebook, Google, and Amazon, all part of that group of tech and comm and discretionary names that have come under regulatory scrutiny, sent all those stocks lower and really sent the tech and comm services sector down hard on the day. Twitter, small deal, announced terms not disclosed. That stock also coming under pressure with the tech and comm names down 5.5% yesterday. So let's get into it. Tech near support, both absolute and relative. What are we looking at here? We're looking at XLK relative to the SPY. So the tech sector relative to the S&P 500. We had a nice breakout above this downtrend line, and now we're pulling back to retest that line slightly just above the 200-day moving average for the ratio. At the same time, on an absolute basis, tech has pulled back and is testing support at the $70 mark for the fund, XLK. Absolute and relative support being tested. This is a key juncture for technology. Bullish investors want to see these levels hold and want to see tech begin to outperform the market again because it is the largest sector within the S&P 500. Now, we do have mixed to slightly bearish signals from the momentum indicator, RSI, of the ratio. Now, the mixed portion is it's slightly bearish because it's moved into towards bearish ranges and rally attempts have not been able to get above 50 as of late. However, at the same time, it has not yet become oversold. So if we can hold support and begin to move higher without becoming oversold, that would be a bullish development from a trend and momentum standpoint. And if you're bullish on tech, that is exactly what you're looking for right now. Markets higher in the near term, tech rallying a bit. Let's look for support to hold and then start to look for opportunities within the tech sector that have held up on a relative basis. And we're going to take a look at one a little bit later in the show. Defensive groups continue to lead. Here's real estate. Remember, it's Tuesday. I do my relative strength work on Tuesdays. Real estate busting to 52-week highs on a relative basis, breaking out of this consolidation and continuing to move higher above the 200-day moving average in a move that is confirmed by momentum as the RSI has shifted into bullish range and is now overbought, confirming the strength of the trend. What do we look for now? We look for support at this breakout level or above to hold on any near-term pullbacks, giving us an opportunity to add names from this sector to the portfolio. I will note on an absolute basis, it has gone sideways, but again, sideways while the S&P 500 has gone lower is enough to lead to outperformance, and we always like to skew to the relative strength. Defensive posture still holding. Utilities also doing well on a relative basis. Materials are improving. We have to ask if this is all a function of gold. Now, trend is still down, but improving, right below the 200-day moving average. But what's interesting to me is this big RSI spike following a positive divergence, sending the RSI for the ratio towards overbought conditions. So what do we want to see for materials? We want to see a breakout above this consolidation, above the 200-day moving average. And we also want to see the absolute trend start to move higher. Again, this has been a group that we've been bearish on, and rightly so. It's been underperforming. However, we do watch on a weekly basis for potential changes of trend, and now this has caught our attention. We're asking the question, is it all a function of gold? Even if it is, then the gold stocks will be outperforming, and we'll know to look there for our long ideas within the group. Relative strength is important. Finally, as said, we'd look at a tech name, Kashi International, TACI, very bullish stock, strong trend, strong industry group. Here's your relative strength again. Held up well. So even as tech came under pressure yesterday, this one was outperformed. Remember, the NASDAQ was down over 2%. Consolidation above a breakout level near $200 triggered an oversold buy signal today. Bullish stock outperforming the market becomes oversold with bullish money flow. Folks, that is the setup. Take a look at CACI. It's my bullish stock of the day today. That is going to wrap it up. I will see you back here tomorrow. Have a great Tuesday, everyone.